So this presentation looks at the requirements of the charitable fundraising regime, specifically in New South Wales and also the ACT, and its relevance to RSL LifeCare. It's important because it is vital that RSL LifeCare engages with and complies with the charitable fundraising regime in all of their fundraising activities. What are we here for? So we're going to start today, before we drill down into the specifics of the charitable fundraising regulation sort of requirements. We thought it might be good to actually have a higher level look at the obligations of charities generally and the specific obligations of a registered charity with the ACNC. It's important, I guess, that a charity knows what it's here for. And you'll know that one of the most key things for a charity is that in everything it knows what it exists for, and it's constantly asking itself whether it's continuing to operate for the purposes for which it was established. So, for example, the ACNC suggests, the compliance checklist suggests these 5 questions as important questions for a charity to be constantly asking itself as it carries on its business. So is your charity working towards its charitable purpose? Is your charity using its profits and its assets only for its charitable purpose? Is your charity meeting its is your charity meeting its reporting obligations? Is your charity meeting its record-keeping obligations? And is your charity meeting the 5 ACNC governance standards? So I guess the starting point here is a question for you, and feel free to have a quick chat to the person next to you on this one. Can you answer these questions in relation to each and every activity of RSL LifeCare? And going deeper, can you have a quick chat to the person next to you? Why do you think these questions are relevant when we're talking about charitable fundraising? So I'm just going to give you a minute, have a quick chat. Why do you think these are relevant? In what ways? Why do you think these are important?
Well, they're important because it's what we represent to the public is what we actually do. So they're one.
Absolutely. And charitable fundraising is all about the purpose for which you receive the money, the purpose that you represent in receiving the money. So you have to know your purpose, which actually leads us to the next question. This is all about knowing if you're using your assets and your income for the charitable purposes of RSL LifeCare. So I'd love to know who can articulate what the charitable purposes of RSL LifeCare are. Do you want to have a quick chat to the person next to you again? What are the charitable purposes of RSL LifeCare? All right, what do we think? What's RSL LifeCare's charitable purpose? Yep. Financially marginalised. Yep. Yep. So thinking through your charitable purposes, there's a technical legal statement of your charitable purposes in your constitution, which you can access. Like the ACNC website has it as a public access if you ever want to have some light reading. But it's quite a technical legal term, like it talks about, terms like direct provision of benevolent relief. And there's actually in the slide pack that we'll give you at the end, or that Kerry will give you at the end, there's a restatement of that from your constitution. But it is quite technical language, but basically it's all those things. It's providing care to vulnerable people, specifically those linked to RSL in your constitution. But it is all of those things, and it is an important thing to know in every step of what you do, because your charitable purposes are key to doing what you do, and it's key to knowing who your beneficiaries and your stakeholders are. So who do you exist to support? You exist to support those vulnerable people, those disadvantaged, the socially marginalised, those that need assistance. And who are your stakeholders? Well, there's quite a range of stakeholders that you have, including the regulators that we'll talk about today. But the regulators are just one area of your stakeholders. Your stakeholders, your key group of stakeholders is those beneficiaries, those people that you seek to support. They're the people that you need to focus on first. The regulatory stuff should sit in the background and enable you to do that. But unfortunately, when it comes to charitable fundraising, we have a reasonably prescriptive regime. That means that while it sits in the background to enable you to do that, it's still something you need to be aware of as you go about your day. But thankfully, the best way to be aware of it is to have a high-level understanding of what the requirements are and to have key people within the organisation who are the experts on this. So I guess my key message at this point is if you learn one thing from today's session, that is, if you have any questions at all related to charitable fundraising, Kerry is the person to talk to. So that's kind of the key takeaway from the session, but obviously we do need to go through the steps and the legal requirements to understand how we get there. So we've mentioned the ACNC governance standards already. So these are a requirement for charities to remain registered with the Australian Charities and Not-for-Profits Commission. If I use any acronyms throughout that you don't understand, please let me know. It's a terrible habit of all of us, I know, but just stick your hand up and explain that I've lost you. So the ACNC, the charities regulator, RSL LifeCare is registered as a charity with the charities regulator, and they have these governance standards that set a minimum requirement for charities in relation to governance. So they're not considered best practice, they're considered the minimum requirement for charities to remain registered. And failure to adhere to the governance standards can result in you being removed from the Register of Charities, which has obviously some extreme results. So Gabrielle mentioned in her introduction that good fundraising practice is considered by the ACNC to be a core governance responsibility of charities. These governance standards, we're not going to go into them in detail now, but they are something for you to be aware of. Have a look at the ACNC website if you want more information on them. But basically, you know, the high level the first one's what we've already said, that you need to be existing for your purposes, you need to be not-for-profit, or your profits need to be going into the purposes, that you're accountable to your members. Those members can be the small set of corporate members, but it's also the broader set of those people that you're accountable to. Those people you're accountable to is your beneficiaries, your stakeholders, the broader public, because you're a charity that exists for the public benefit. That you need to comply with Australian laws. Suitability of responsible persons. So your responsible persons is essentially your board of directors. So your board of directors needs to be the right people who are qualified to act as directors, and the right, I guess, pool of people, in the sense that people from sufficient background and understanding to actually create a governance board that can achieve its purposes, and duties of responsible persons. So the requirement of the governance standards is that RSL LifeCare takes reasonable steps to ensure that its responsible persons adhere to their duties. And so that means that RSL LifeCare needs to make sure the directors understand what their duties are, and puts in place a framework to enable them to actually comply with those duties. So to act with reasonable care and diligence, to act honestly and fairly in the best interests of the charity and for its charitable purposes, not to misuse their position for financial gain, so that's conflict of interest, to disclose conflicts of interest, to ensure that the financial affairs are managed responsibly. So obviously that's where your CEO and your financial department have responsibility to make sure the board has all the information they need to manage the entity, and not to allow the charity to operate while insolvent. So those duties of responsible persons are very similar to like directors' duties of a large corporate entity. They're no different. The requirements are largely the same. So that's where the governance standards sit in. So that's kind of a bit of a high-level sitting back and looking at, well, what do charities need to focus on before we actually kind of drill down, I guess, into more the specifics of charitable fundraising. But it is important because the ACNC is one of your regulators and it's one of your charity regulators. So it's important to know as we go along. So as we look at regulation of charitable fundraising, so this just gives you a little bit of a snapshot. I guess it's a constant joy and struggle functioning in a federated legal environment, in that we have duplication of regulation, we have the multitude of state and federal government departments, and I'm sure in your industry you've also got like a multitude of state departments alone that are regulating what you do. And charitable fundraising is a clear example of this problem. We have regulation at both a Commonwealth level and a state level. So these are the key bodies that we need to be aware of who are regulating us. We have the ACNC, who administers the ACNC Act, the ACNC regulations, the governance standards that we've referred to. And now they also they regulate fundraising in the ACT for registered charities. New South Wales Fair Trading administers the Charitable Fundraising Act, the regulations, the conditions and your special conditions for both registered charities and non-registered charities. So in New South Wales, it doesn't matter that you're registered with the ACNC as a charity, you still are regulated by New South Wales Fair Trading in relation to charitable fundraising. And Access Canberra, up until recently, Access Canberra regulated all charitable fundraising in the ACT. As of mid last year, a registered charity like RSL LifeCare now no longer is regulated by Access Canberra in relation to charitable fundraising activities. That's all regulated by the ACNC. So basically Access Canberra has sort of said, if you're regulated by the ACNC, we're happy that the ACNC is doing the job to ensure that you're doing the right thing. We don't need you to report to us as well. So thankfully, some of that duplication has gone, but obviously not in New South Wales. So we will talk about that in a bit more detail as we go along. These are kind of the key concepts that we need to think about in relation to charitable fundraising. So we look at, like, what is charitable purpose and why is it important? What's a fundraising appeal? What does it mean to be conducting a fundraising appeal? And what does it mean to be participating in a fundraising appeal? So if we start talking about charitable purpose is a very interesting phrase because it's a phrase where the popular meaning and the legal meaning are completely divergent. So if you talk about most people on the street and you ask them what a charity is, they would talk about, you know, someone that feeds the homeless or gives money to the poor or supports the destitute. They probably wouldn't talk about schools and churches and hospitals and organisations like that. So the popular meaning of charity is quite a narrow definition. And then you have a legal meaning of charity that is a much broader definition and has about, 12 or 13 different heads of charity under the Charities Act. And then we have the meaning of charitable purpose for the purpose of New South Wales charitable fundraising, which is a slightly broader definition again. So under the Charitable Fundraising Act, charitable purpose includes any benevolent, philanthropic or patriotic purpose. So if we look at the Charities Act definition, it's more technical, it's more specific, and it's slightly narrower. So in the Charities Act definition, which is a piece of Commonwealth legislation, charitable purpose means advancing health, advancing education, advancing social or public welfare, advancing religion, advancing culture, promoting reconciliation, mutual respect and tolerance, promoting or protecting human rights, advancing the safety and security of the Australian public, preventing suffering of animals, protecting the natural environment, and other purposes beneficial to the public. So that's the narrower Charities Act definition, which is already, as I'm sure you can understand, much broader than that popular definition of what a charity is. And then you've got the New South Wales charitable fundraising definition, which is wider again, because it includes benevolent purposes, it includes philanthropic purposes, and it includes patriotic purposes. And it's probably patriotic where it's most broader, where it broadens it most. But it does include some things that might be technically not charitable in the Charities Act sense. So benevolent purposes can include acts of goodwill to a single individual, but it's about relieving poverty, distress. So that's probably what you'd normally expect charitable to mean, but it can go a bit further because it can be directed to a single individual rather than directed to a pool of people. Philanthropic purposes looks at focusing on eliminating a social problem rather than just addressing the need. So it can kind of be a bit broader than that charitable purposes. And patriotic purposes probably stems from a wartime need to actually regulate fundraising that was occurring from a home front point of view. So that's probably a bit of a Band-Aid approach is not the right one, but it was probably a definitional thing that was put in there as a response to a particular need at the time and has remained, but is somewhat broader than that Charities Act definition. What is a fundraising appeal? This is a really strange term, really, because it's the term fundraising appeal would make you think that you need to be actively doing something in order for it to be a fundraising appeal. But actually a fundraising appeal includes both asking for donations from the public and also the receiving of donations from the public. So there's an element to which a fundraising appeal can actually be a passive activity on the part of the charity itself, which is a little bit confusing. But broadly the definition is asking for, receiving from the public money or other benefits where a representation is made in the course of the activity that the money or benefits is for a charitable purpose. In the ACT, there's a very similar definition for what a charitable collection is. So it's once again soliciting or receiving by a person if during the process of it there's a representation that it's to be for a charitable purpose or includes a charitable purpose. So this could encompass a passive activity on the part of RSL LifeCare. There's an argument that a charity, simply by existing for charitable purposes, makes an implied representation that any donations they receive will be for a charitable purpose, because obviously you can't do anything else with your income except use it for charitable purposes. So what that means is that people offering to give you things can constitute a fundraising appeal, which means that while the temptation will be to say this charitable fundraising regulation stuff is all too hard, fundraising is such a small part of what we do, let's not do it, let's just give up the fundraising authority. It doesn't quite work like that, because you are a charity, you exist for charitable purposes, and people are going to want to support you, and that can constitute a fundraising appeal, even if you haven't actively gone out and run an event or door knocked on the street. You still can be involved in a fundraising appeal. Just to put in a note there though, bequests are not included in a fundraising appeal. So if someone makes a bequest to RSL LifeCare, that doesn't constitute a fundraising appeal. That's kind of a separate thing entirely. But your charitable fundraising and donations policy does deal with bequests, and so it's worth bearing that in mind, that if there is a bequest, it kind of falls under the same umbrella for your purposes, because you've packaged it all into the same policy. conducting. What does it mean to conduct a fundraising appeal? This is important because the legislation sets different requirements and different penalties on the person, and person means person or organisation, so legal person or natural person. The person who organises the appeal or conducts the appeal versus those who merely participate in the appeal. So obviously the requirements are higher on a person who conducts the appeal. But who does conduct the appeal? So it's the person or organisation who organises the appeal, and that can be alone or with others. That can be in person or like through a person as a director or management of the organisation. I think it's a fair rule to say that if an employee of RSL LifeCare is organising a fundraising appeal on behalf of RSL LifeCare, then it's RSL LifeCare that's conducting the fundraising appeal, and that person is doing it as agent of RSL LifeCare. So the liability for how the fundraising appeal is managed and conducted sits with RSL LifeCare, if that makes sense. There is a distinction in the legislation between the person who organises or conducts the appeal and the person who assists in organising or conducting the appeal. If you organise the appeal, you're the conductor and there's penalties as a result. And if you merely assist in organising the appeal, then you're a participant and the penalties are different. But I just want to draw your attention to the Bergen report. So in Chapter 13, it highlights that there's some uncertainty there on exactly where the line is between the people who are merely participating in assisting in conducting the appeal and those who are actually conducting it themselves. So it does, there is definitely some uncertainty in exactly who's there. So I think, I guess my suggestion would be, if in doubt, assume that you're actually conducting the appeal. So hold yourself to the higher level of requirements and adherence to the requirements. If you're not sure, cover off that you have actually covered off all the requirements in the fundraising legislation, because you can't necessarily simply leave it to someone else to take that responsibility. Gabrielle, did you want to add something? Oh, no, you're right. So who participates in a fundraising appeal? So a participant is the one who's actually out there soliciting funds. The participant is essentially an agent of the organisation conducting the appeal. And the participants are the ones who are actually out there knocking on doors, asking for money, asking for donations. So if you were to have kind of a broader scale fundraising activity where lots of people are out there asking for money, each one of those people is a participant in the fundraising appeal. RSL LifeCare may be a participant in fundraising appeals where they allow fundraising appeals for other charitable organisations to occur in RSL LifeCare property. So, for example, if you have Legacy Badge Day or Daffodil Day or those sorts of things within the villages, that would make RSL LifeCare and its employees a participant in a fundraising appeal being conducted by someone else, which means that you're not held to the standards of the organisation conducting the appeal, but there are still requirements on RSL LifeCare and the individuals participating to ensure they adhere to certain requirements along the way. How are we going? We're all good? We're all clear? Any questions at this point?
What's the difference between a legal person and a natural person?
Sorry. So a natural person is obviously a human being.
That's relief.
Yeah. Yeah, a natural person's a human being. The law recognises what they call legal persons, which is like an incorporated entity. So a company like RSL LifeCare is taken to be a person for legal purposes in certain legislation. So in the Charitable Fundraising Act, when it refers to a person, that term person can mean both a human being and a company, because a company is given legal personage for legal purposes. It's a typical lawyer thing. We just make words mean whatever we want them to mean, really. But that's essentially what it means. So when you're reading legislation and like the conditions and the charitable fundraising legislation and regulations, just because it says person, it doesn't mean an individual, not the company. It can actually mean the company. And that is sometimes clear and is sometimes not clear. So just because you read the words person, don't assume human being. Think legal person, which includes an incorporated entity. Is that clear as mud? Or?
Absolutely.
So we were going to have a chat about some examples of what activities of RSL LifeCare constitute charitable fundraising when RSL LifeCare is conducting a fundraising appeal and when it's merely participating. So Gabrielle was going to just talk through some examples from RSL LifeCare's perspective.
Thanks, Claire. So the key to these questions are the three concepts that Claire's just spent a bit of time on. First, you have to ask yourself, is there a fundraising appeal? Does this conduct constitute something that's a fundraising appeal? And she spoke to you about you need to be looking for, is it being done for a charitable purpose? And is there a representation before or during the conduct that says it's being done for a charitable purpose? So that's your fundraising appeal. The next question you've got to ask yourself is, who is conducting the appeal? If there's a fundraising appeal, is someone conducting that? And is it you? Is it RSL LifeCare? Or is it you as an agent for RSL LifeCare, in which case it's RSL LifeCare? Or is what you're doing maybe participating in someone else's fundraising appeal? And the reason we've got these questions is I've been working with Kerry since early January, I think, looking at some of the range of activities that are conducted at your premises. And I was just going to touch on a few of them today to see, based on what Claire's just run through, whether you can answer some of the questions now. So the first one I was going to throw to you is social bingo. So activity coordinators organise social bingo at residential care units or somewhere on your facilities, and residents pay, I don't know, say $3, covers the cost of morning or afternoon tea, chocolates for a small win, food and drink vouchers. Does anyone want to have a go at the first question? Is there a fundraising appeal?
No.
Where was that answer from? Thank you. Why not?
Because it's benefiting our residents.
Yeah, so it's not, where's the connection to your charitable purpose? There isn't a connection. It's a social activity. It's for private benefit, personal enjoyment. So we don't even need to get to the next level. We don't need to think about who's conducting it. We don't need to think about who's participating. You could look at that. In that example, as I understand it with social bingo, the money that's raised also, there's not a surplus. It goes back into the event. It covers the cost of the social activity. So thank you. First one, well done. Next one, what about sweeps, where the income is dispersed as winnings? So Melbourne Cup Day sweep. Does anyone want to have a go at that one?
I hope it's a no.
Good. Why not? So those three questions, is it a fundraising appeal, is where you start. Why not?
Because it's a similar principle of what you just
Yeah.
described, really. It's
Perfect.
just for the benefit of those that are participating in the activity.
Exactly.
And there wouldn't be a surplus as well.
Yeah, that's helpful too, because then you don't have to start thinking, oh, did someone say something, or did someone represent something, or did we make, representations in relation to our charitable purpose? So the absence of the surplus at the end is helpful. It's also helpful to Mark and his team, because where do you bank the surplus? Where does it have to go? How does it have to be accounted for? Where does it show up in the books? And Claire's going to come on to some of the regulations, the many regulations that sit around what you do with proceeds when you are conducting charitable fundraising. So that's right. Claire touched on it a minute ago. I understand that around Legacy Badge Day time, or at the times of the year where there's fundraising for legacy, on occasion there's been sale of legacy merchandise on your premises or around your centres. Does anyone want to have a go at the first bit? Is that a fundraising appeal? Right. I heard a yes. Well, why is it a fundraising appeal? Where did I hear a yes on this side? Yeah, that's all right. Have a go.
Well, it is fundraising funds
Yep.
for an organisation, and we're participating in that.
Yep.
It's not ours, but we are raising money for the purpose of that.
Their charitable purpose for the money, for the things that they apply their money, their income and revenue to. That's right. And you've actually touched on the second question, because that once you say, is there a fundraising appeal? Has someone represented a charitable purpose? Okay, we're in the act. We know that there's a fundraising appeal. The minute you've identified that, you need to think, okay, where are we now? Conducting or participating? And you've just answered it. Participating. It's not being conducted on your licence. It's not for your charitable purposes. It's for legacies. But there will be requirements under the Act, and Claire's going to come on to some of those. But when RSL LifeCare is participating itself as an organisation, it would need to obtain written authorisation from Legacy to do so. It may be that it's not being done at the organisational level. It may be that it's being, the participants are actually people who live here or that are coordinating it through one of their social committees or whatever. So there are questions that then need to be stepped through, and that's where it gets a bit curly. Some of the nub of those issues become complicated, and that's why a policy and a manual is being developed, and we've been working with Kerry to sort of help identify those steps and work out what are the key questions. And ultimately, there's an approval process that will now sit. But you need to, as you have just seen, you need to be able to identify, is there a fundraising appeal? Okay, the minute you see that, alarm bells, Charitable Fundraising Act may apply, what do I do next? So that's a key question. I'll just look at one more. External businesses come to one of your sites and set up some market day stalls. They are not charged to attend, and they raise some income for their own. It's an activity where your residents can go and purchase some goods that they've prepared. At the end of the event, someone or one or two of the stalls spontaneously donate a couple of items to the activity coordinator who arranged the stalls. Is it a fundraising appeal? Someone said yes here. Did I get a yes? Yes? Why a yes? No, someone else have a go. So did I hear a yes anywhere else, or was it a no? Like, I'm just interested. Do you think there's a fundraising appeal in this context?
I would say,
I'm not sure why.
Okay.
I would say yes, although we didn't go out and seek it. Funds were actually given, or something was given to us.
Some goods, yeah.
Given to us for our charitable purpose.
Yeah.
It would depend on the dollar value.
It would depend on what?
Dollar value.
No, it never depends on the dollar value, unfortunately. It's sort of, you wish there was a de minimis threshold and we could just go, oh, $10 worth of goods. But,
So
yep.
not money they've given us, they've actually given us money, or they've given us items?
So goods and money are covered by the Act. So the receipt of money or goods, both covered. So the question is, was it given to you for your charitable purpose, and before or during the activity of receiving, was it represented to them that it would be used for your charitable purpose? It's really difficult. There's not a clear one, and it's one that Kerry and I have talked about. And it really, you have to look at all the circumstances at the time and really consider it, because did they provide those goods to be used at the next bingo activity, where it could be part of something that was used as a prize for the private enjoyment of your residents? Or is there a crossover point at which, where they're giving it, it relates to your charitable purpose and you providing social amenity to your residents? So it's going to be tricky at times, and there's not always going to be a clear answer. And in those circumstances, it really does need to get elevated. You need to go to your policy, think, oh, what should I be doing here? Have a chat to Kerry, have a look at the policy, have a look at the approval process, and think about it, because there are consequences. If it is, then maybe it'll need to be accounted for. Well, it will, not maybe, it will need to be accounted for in a certain way. On some occasions, it may be that it's a fruit platter that, I don't know, ends up at the Friday lunch and is a lucky door prize, and it really goes straight back to private benefit, and there's no real giving for a charitable purpose and you didn't seek or solicit it for your broader charitable purpose. So the intention of both sides of the fence is really, it wasn't for your broader charitable purpose, it was just a gift to be used in a single activity. You might be able to, on that basis, step away and say, on this occasion, it didn't constitute a fundraising appeal, we didn't get through that first hoop. So look, they're not always easy. The last example's a really curly one and there's no clear answer and you have to look at all the facts and circumstances and weigh it up. But it's worth, just being alive to the three key questions. Is there a fundraising appeal? So think about, was this given or received for charitable purposes? And before or during the solicitation or receipt of that money or thing, was there a representation that it was for those charitable purposes? The second thing is, who's conducting, who's organising, who solicited or received and who ran that process, who organised it? Was it RSL LifeCare? Your alarm bell should really be ringing at that stage. Or maybe not. It might be a legacy type example or a daffodil day where it's not on your licence. Someone else is organising that appeal, but you've allowed some residents here to sell daffodils on Daffodil Day, in which case they might still need a written authorisation. There may still be requirements, but the liability that attaches is different. And then thirdly, if it's not conducting, you still need to think about, is RSL participating at an organisational level? And that's relevant as well, and Claire will come on to this, but if you're participating, you just can't turn a blind eye and say, oh, we're not conducting it, and therefore I can turn a blind eye and I don't need to worry if it's being conducted lawfully or unlawfully. Because you do, as a participant, if you are knowingly involved in someone else's fundraising appeal which is being conducted unlawfully, you can find yourself in trouble too. So that was just to give Claire a little rest, and I'll hand back to her.
Thanks, everyone. I've had some interesting conversations in the break that highlight some of the challenges with this fundraising regime, because it's often very difficult to work out if you fall within it or not. But then once you fall within it, and as we're about to look through, once you're within it, the requirements are actually quite prescriptive on what you have to do, and in some ways like ridiculously over-prescriptive from a regulation point of view. So sometimes it can actually be really, really difficult to work out whether you fall within the fundraising legislation or not. I just had one chat about, could Coke machines in the village cause a problem? Well, probably not. It's probably just a commercial arrangement. But it might depend on the terms of the commercial arrangement. And, if some residents get together and decide to have a bake sale and do it unbeknownst to you and then give you your money, at what point does that constitute them participating in a fundraising appeal of RSL LifeCare? And once again, it's a little bit hard to know exactly at what point that comes in. If it's just a group of family or friends that gets together and eats cake and gives donations, then that's probably nothing until it's actually given to you. But if it's a group of family and friends that gets together and bakes a whole lot of stuff and then goes out onto the beach and sells it on the beach and says we're giving the money to RSL LifeCare, is that actually them participating in a fundraising appeal conducted by RSL LifeCare? Maybe, maybe not. Probably not, but how do you actually navigate this, and how do we ensure that that things are done properly? So it's murky. And I'm sorry if we've confused you, but this is part of the problem with this regulation, is that it is quite confusing. It can cover a whole array of activities. And so it really is that it needs to be done on a case-by-case basis, which is once again coming back to if you learn one thing out of this session, it's that ideally within the organisation you'll have one person that knows everything that's going on in this regard. So once again, Kerry. So that's the ideal. Like if you're ever not sure, if there's something going on that you're just not sure, that's where Kerry can help you out. And if she's not sure, she'll talk to Gabrielle, and together they'll work it out. So that's part of the ideal. So we're turning now to the specific legislative requirements. And as I've said, it's quite a prescriptive regime. And it's important that RSL LifeCare is compliant with these requirements in conducting any fundraising appeals. So failure to comply with the requirements of the charitable fundraising regime could result in loss of authority to fundraise. It could result in financial penalties to RSL LifeCare or to an individual in certain circumstances. So in some circumstances, the board of directors could be held liable for breaches. In some circumstances, individuals participating could be held liable for breaches. And there are even a couple of provisions, there's at least one, I think there's a couple, where the penalty could potentially be jail time. So one or two of the penalties is up to 2 years jail time. So obviously that's something we really want to avoid. These are good reasons to ensure that RSL LifeCare is at all times compliant in relation to its charitable fundraising. The good news is we're only talking about New South Wales and ACT. Organisations operating within the charitable fundraising regime across the entire country have real difficulties complying with all the requirements because they're so varied. In looking at the requirements, we're going to kind of focus on these four main areas, and this is where it does get quite specific, probably a little bit boring, sorry about that. But this is kind of some of the prescriptive process stuff that's really important to understand in relation to fundraising. So the first one is a separate bank account. So the gross income received from an appeal must be paid immediately into a separate bank account held for the purpose of fundraising appeals conducted by RSL LifeCare. So you can have one bank account for all your fundraising appeals, but you should have a separate bank account for fundraising appeals. And it's the gross income that needs to go in there. So you put the income that you receive from your fundraising into the bank account, and then you draw on that any expenses that need to come out in relation to the fundraising appeals. You can't deduct the expenses before you deposit it. The requirement is that it's deposited immediately. The ACT explains their requirement is that it's deposited as soon as is practicable, but within 5 working days. So the ACT requirements is immediately sounds like a stronger term than as soon as is practicable, and within 5 working days. So basically it needs to be deposited as quickly as possible. I'm just trying to think of other legislation that uses language like immediately. Like I know for lawyers and trust accounting, you have to deposit anything that working day. I'm not sure if this is that specific to say that working day, but I would say it's definitely within 5 days, but really do it as soon as you can, because immediately is a fairly strong term. So it's certainly not a leave a bag of money sitting under the bed type situation, and it's not a kind of, sit on it and let it trickle in slowly over a long period of time. Get it into the bank. This is all logical from a financial management point of view generally, but it's just something to think about, especially with fundraising. If you're talking about smaller amounts of money, it can be easy to think, oh, we won't bother. We'll let it build up a little bit before we bank it. Best to bank it as soon as possible. Payment of any expenses out of that money can then be made once the money's been banked. But once again, the requirements are quite prescriptive. Any expense amount over $260 needs to be paid either by cross-check or electronic funds transfer. In other words, it can't be paid in cash. So that's all about keeping track of the expenses that come out of your fundraising appeals. And considering that RSL LifeCare's special conditions in relation to your charitable fundraising are specifically around expense policies and keeping track of expenses, I think that's one be particularly aware of, that basically really any expenses need to be tracked very, very well, and should probably all be done by electronic funds transfer. So statement of income and expenditure. So clear records in English need to be kept in relation to income and expenditure in relation to the fundraising appeal. Condition 3 of the condition. So if I refer to, we've got the Charitable Fundraising Act, we've got charitable fundraising regulations which sit underneath the Act, and then we've got the conditions which sit underneath the regulations. And then RSL LifeCare has its special conditions as well that sit under that as well. So there's kind of 4 key places that we find the regulation in relation to New South Wales charitable fundraising. So it's all a bit higgledy-piggledy where you'll find it. So some of the requirements are in the Act, some are in the regs, some are in the conditions more broadly, and some are in your special conditions. So they're kind of the 4 key places you need to look. So if I refer to the Act, I'm talking about the Charitable Fundraising Act. The regulations is the Charitable Fundraising Regulation. The conditions are the general conditions that apply to authorities to fundraise in New South Wales. You can find them on the New South Wales Fair Trading website. And special conditions are the extra ones that apply to RSL LifeCare effective last month. So that's kind of terminology things. So condition 3 of the conditions requires that an organisation conducting fundraising must maintain such books of account and records as are necessary to correctly record and explain its transactions, financial position and financial performance. So really what that is saying is that at any point in time, someone should be able to come in and say, where are you up to with a fundraising appeal? And you should be able to just pull out a whole lot of registers and a whole lot of information that clearly sets out the information at any given time. So the conditions talk about specific types of registers, like a cash book for each bank account, a register of assets, a register of receipt books, a register of tickets, if you're using raffle tickets or something like that, a petty cash book. For an organisation like RSL LifeCare, it's necessary that you have a specific minute book that records the minutes of the board meeting that specifically relate to fundraising appeals, or the minutes of any general meeting that's business that specifically relates to fundraising appeals. So you should have a specific fundraising related minute book for your board and for your general meetings. And that's both annual general meetings and extraordinary general meetings. So any time that the members discuss business related to fundraising appeals, there needs to be a minute of that put in a minute book relating to charitable fundraising. You need to have a register of participants. So they're the sorts of registers that need to be kept. Sounds like a lot, probably is a lot, but that is the idea, is that at any given time someone can come in and get a clear picture of exactly what's going on from a fundraising perspective. It's not you have to scurry around to try and find the information. It's at a point in time we know what is going on here. So that's kind of the statement of income and expenditure. Now, records, so sort of touched on this, but you also need to keep records in relation to identification cards and badges, receipt books and collection boxes. So if you, I think your policy specifically says no collection boxes, but one of the requirements is that participants are given some sort of ID badge to enable them to participate in a fundraising appeal. So you need to have a register of all those ID badges to enable you to know who your participants are. You need to know where the receipt books are. A lot of this stuff, probably harks back a little bit to 20 years ago, and, the people going out and getting $2 donations and having the little receipts that they immediately thing off. It's done a little bit differently now. So a lot of this is all just software based, but you still need to have clear records in your software that enable you to track all of this stuff at any given time. receipting requirements. So receipts must be written or issued immediately. And that immediately I take to mean literally immediately. So someone gives you money, you write a receipt and hand it to them. I know there are situations where, I'm just thinking back to my Legacy Badge Day years, that I think these days you fill in a little thing with contact details and send it back to Legacy and they issue the receipt. So I would say that it's, once again, as soon as is practicable. Where it's a donation, like direct debit, thinking like, I don't know, World Vision Child Sponsorship sort of donations, which may not be relevant for you in any circumstance, but those sort of donations you can receive once a year. So if it's a direct debit style relationship where the funds are transferred via electronic means, you can just aggregate the donations and receipt once a year. So that's receipting. So that's kind of some of the specifics. My summary of that in one sentence would be, if you can record it, which sounds really like a high-level prescriptive requirement, but it's basically just saying you really do need to know what's going on at any given point. Now, once again, I probably feel your frustration in that we've raised confusion just 10 minutes ago about what even constitutes a fundraising appeal, and now I'm saying everything needs to be recorded and written down. This is one of the problems with the regime, and this is what we're trying to work with, sadly. So, specific gifts and general gifts. So when you receive a donation, the donations need to be applied according to the objects or purposes represented by or on behalf of the persons conducting the appeal as the purposes or objects of the appeal. And that's probably a convoluted way of saying, if you ask for donations for a specific purpose, they need to be used for that specific purpose. So RSL LifeCare has a specific charitable purpose. The charitable fundraising regime says if you're collecting money for charitable purposes. But when RSL LifeCare collects donations, those donations are quarantined for RSL LifeCare's charitable purposes. So that's a more specific charitable purpose than the general charitable purposes of the charitable fundraising regime. Does that make sense?
Claire, can I just mention there as well, just even sometimes within that broader charitable purpose, on occasion I know that you have collected for specific charitable purposes that are more limited than your general, and the probably best example I can think of is Homes for Heroes. So where there has been a specific fundraising appeal consistent with your charitable objects, where you say we're raising money for Homes for Heroes and you take money from the public for that purpose, then that's where this specific versus general that's the pointy end of it. You can't then apply some of that money to some other purpose within your charitable purposes. It has to go to the Homes for Heroes. So that's just another practical example.
Absolutely. So you can choose to run a more specific fundraising appeal than the general charitable purposes of RSL LifeCare. So you can say we want to do an appeal for a very specific thing like Homes for Heroes. And if you represent that the money will be used for that purpose, then the money must be used for that purpose.
Can that be even more specific, that if the donor says exactly where they want it to go to, that's exactly where it has to go?
Yeah, absolutely. And so the language I would use in that regard, and I'll show you in the next, this little diagram, I would call that a constructive charitable trust. So, and that's where I do this because triangles represent trusts. So the triangle is to represent a specific charitable trust that forms around that gift. And that money must only be used for those purposes. So you do specifically see it in a bequest situation often, which is obviously slightly outside our charitable fundraising. But in a bequest situation, someone might say, I want to give $10 million to RSL LifeCare for the purpose of setting up a new community centre in one of the villages building and maintaining a community centre in one of the villages. Now, RSL LifeCare must, in that bequest, use that money for that purpose. And if they can't use that money for that purpose, then we would say the gift fails. So you either need to give the money back to the donor, which is obviously slightly difficult in a bequest situation. But in a bequest situation, it might be that you actually need to give the money back and the money is then given to the residual beneficiary under the will. Or you need to go to the New South Wales Supreme Court and get what's referred to as a cypre, which is the Supreme Court saying how you may use the money in light of the fact that you cannot use it in the terms of the charitable trust that sits around that money. So that's the circumstances of a specific gift. Now, in charitable fundraising, that happens as well. So if you hold out that it will be used for a specific purpose, it must be used for that purpose, or else the gift fails. And theoretically, if the gift fails, the technical thing is that you need to give the money back to the donors. I think one example of where we saw this in practice was the Victorian bushfires. Now, how long ago were they? 10, 15 years ago? The Victorian bushfires, I think Red Cross got so much money that they just couldn't, people just gave so much towards that appeal that they just could not possibly use all that money for that purpose. And I think what they ended up doing was actually getting government relief, allowing them to use it for other purposes. Sorry, yeah?
Yeah, just on the point of donations that are received for a specific purpose, we can get ourselves into tight corners because once we accept it, we then have to take it for that purpose. I've been part of another organisation that took the view that that was too difficult to manage, and therefore we would say we'll only accept for the general purposes. If you want to give a specific donation, we just won't be able to accept it because of the administrative overload or other challenges around. They also wanted a tax deductible receipt, and that brings into play provisions with the ATO around that you can only give a tax deductible receipt for the general purposes of the organisation, not specific. So that would stop someone saying, "Look, I would want to donate $2,000 to a mobile wheelchair for my grandfather in your village."
Yep.
We've got those sort of challenges to work our way through.
Yep.
So I think, as part of our policy work, we just need to be clear, because once someone in the organisation accepts the money for the purpose, you then oblige the organisation to execute on that purpose.
Yep.
So that's a challenge for us. The other challenge for us is where someone has, a group of residents, to say, have done some fundraising and they raised $130 for the toiletries of the ladies of a particular village, and they want to hand over the money. It gets very hard at that point to sort of say no when they've already represented the purpose, which we didn't know about, and here it is, and now we have to record it and account for it, and sits on our balance sheet until we've spent it all.
Yep.
So again, it's not an easy situation, but we all just need to be aware that's the situation we're in.
Yeah, absolutely. And I think in some ways there are, a lot of the time when we talk about legal regulation, I sort of said before that this sits behind you doing what you actually do. This is a bit of a noisy one that sits behind you doing what you actually do. But part of it is all in the messaging and how you communicate with your residents and your stakeholders in relation to things. So, for example, regularly having in your newsletter, hey, we love that people want to support us, but if you do, can you please get in touch with blah, 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 Kerry, in order to chat with us first so we can work out the arrangements so that you avoid some of those things. The other thing that can be helpful to do is if you're publishing any materials in relation to a fundraising appeal, or if you've got a letter, I think part of the policy is that you'll have a charity pack that goes out to all participants. Part of that charity pack should say to participants that the message you want to provide to your donors is that the money we receive will be used for purpose X, Y, and Z, or for the general purposes of RSL LifeCare. And if you can add in that extra or for the general purposes, then you actually cover yourself off, that the gift won't fail if you fulfil your initial requirement. But you need to make sure that message is actually going out as well. It's not enough to have it written in your literature if no one actually says it. But that's part of it as well, is that making sure that the message goes out there, that excess donations, if you receive donations in excess of what you require for your specific thing, then those donations will be applied towards the general purposes of RSL LifeCare. Then that does cover you off. It means that the gift doesn't fail. It's not quite so specific a gift. So once your pool of the specific gift is full, the rest can go into general giving. So that does give you a little bit of protection there. But this is still something that you need to be aware of. It's definitely something from an accounting point of view that you need to be aware of, because obviously that sits in specified funds within your accounts. But yeah, it is important to know what message has been put out there. I was involved recently in a donation to Westmead Children's Hospital, but it was to a specific clinic within Westmead Children's Hospital. So in all the documents, we sort of said, this donation is going to the Westmead Children's Hospital for the purpose of the CF clinic. And multiple times we said for the purpose of the CF clinic, and then even then when it came time to hand over the cheque, the person receiving the cheque said, now what do you want us to do with this money? And we said, well, it's for the general purpose of the CF clinic. And they're like, well, do you want us to do something specific with it within the clinic? And we're like, no, general purpose, CF clinic. But you've just got to make sure that those messages go through. And you will have some donors who are really specific on what they want to happen with their money. And that's where we need to go back to those bigger questions from the beginning of what are the purposes of RSL LifeCare? Because one of the dangers of this sort of thing is that you start to follow the money. So someone comes to you and says, I think you need to do this and I will give you this money for this specific purpose. And you're like, wow, that's a lot of money. We could do a lot with that. But is that purpose somewhere that you want to go and somewhere that fits into those questions back from the start of, is this part of RSL LifeCare's specific purposes? And you do see there's a lot of charities out there that have deviated from their charitable purposes or lost their way from their specific charitable purposes because they've followed the money. They've followed where people are willing to give them money rather than setting the agenda themselves and actually being willing to say, no, thank you, we appreciate the offer, but that's not somewhere we want to go. So that's one of the questions around specific gifts too. You actually need to stop and say, is this something that fits within our charitable purposes? Is this something that fits within the direction that RSL LifeCare is wanting to head? And if the answer is no, you need to actually be willing to say no thank you. Maybe you need to direct that gift to someone else. Which obviously within the charity space can feel like a very bold thing to do. But that is something that is important in the same way that if a government contract came up that requires you to head in a direction that's different from where you're going, you'd say, well, I won't apply for that one. I think with donations, it's a little bit the same. So yeah, specific gifts held on trust for a specific purpose must be used for that specific purpose or the gift fails. General gifts fall within the broader charitable purposes of RSL LifeCare and can be used for those broader charitable purposes. So very important to know what message actually went out in relation to the gift and what the donor's intentions are. And it also means, next step from that, going back to record everything. If we're talking about a sizable donation, get the donor's intentions in writing, ask for a letter, ask for an email, make sure it's in writing so that you can track it and know what the requirements are. So reporting requirements. So this is the Charitable Fundraising Act requirements for reporting. So there needs to be an annual audit of the charitable fundraising accounts by an appropriately qualified auditor. And failure to have the accounts audited is an offence, $5,500. Not a huge amount of money, but still an offence, and that could result in loss of authority to fundraise as well. The auditor must specifically report on whether the accounts show a true and fair view of the financial results of fundraising appeals for the year, whether the accounts and records have been appropriately kept, whether money received from fundraising appeals has been appropriately accounted for and applied, and the solvency of the organisation. So the auditor in the audited fundraising accounts must cover off those requirements, and this is in addition to the requirements to have audited accounts for the ACNC. So it's in the space of audited accounts, I think you could potentially use the same accounts as long as there's specific notes that cover off the fundraising requirements. So the special purpose financial reporting covers off the fundraising requirements, but the auditor does specifically need to address charitable fundraising in the accounts. It can't simply be a kind of cover-all. You need to prepare and keep annual financial accounts in accordance with the conditions. Must contain an income statement, a balance sheet, and if income from the fundraising appeals exceeds $100,000, you need to have notes that have details of the accounting principles adopted in relation to the fundraising appeals. Information on any material matter or occurrence, so that may be that you need to set out the specific nature of the fundraising appeals. Obviously any non-compliance needs to be in there, but also material compliance. So a statement that describes how your net surplus is being applied. If you've got a trader involved in your fundraising, there's issues there, and you need to include there details of any director's remuneration as well. So in the case of RSL LifeCare or a fundraiser that's an organisation, you also need to have a statement by a responsible person. So this would usually be the chair of the board, would also include a statement in those financial statements that says that the income statement gives a true and fair view of the income and expenditure with respect to fundraising, that the balance sheet gives a true and fair view, that the provisions of the Act, regs and conditions have been complied with, and that the internal controls in relation to charitable fundraising appeals are appropriate. So that's a requirement of the chair in relation to these. And then you've also got Regulation 15 in the regs that requires that if a person, and it's any person, it's not a member of the organisation or the minister or any specific person, if any person requests a copy of the annual financial statements in relation to fundraising, they need to be provided with them on request up to 7 years back. You can charge them for it, and there's a specific charge. I think it's like $14 for the first page and 30 cents for every page after that, or something like that. There's a specific charge of what you can charge them for it. But if any person requests details of your charitable fundraising financial statements, you need to provide them. The obvious there would be, a donor who's wanting to make a large donation might come and request that detail, and the other obvious is a journalist. So they'd be sort of the two that you'd most expect to request that sort of information, and you can't refuse. You need to provide it up to 7 years back.
And sorry, but that information would be readily available to them through the financial statements that would be lodged with the ACNC?
Well, they can certainly access what's been lodged with the ACNC, but
Can I just jump in there? What we're talking here is special purpose accounts. Sorry, so you have your regular reporting that you got, the annual information statement and your reports that go to the ACNC. But because you have the overlay of the Charitable Fundraising Act, there are specific requirements about additional special purpose
I would have thought that for practical purposes, most organisations would include those special purpose requirements as notes of their financial statements that they lodge with the ACNC, because that reduces duplication. It's one audited package. So for a practical point of view, yes, it's the same document, but I don't think, if someone came to you and said, I want your financial accounts, I don't think you can say that's publicly available, go to the ACNC website.
Tell them it's cheaper.
Yeah, you still need to actually go ahead and do it, I think. So yes, I think from a practical point of view, it probably would all be one document and would be publicly available. Although at the moment, the ACNC register hasn't been around for long enough to fully cover off the 7-year requirement, although we're getting close. But yes, practically speaking, it is publicly available, but you still can't refuse to provide it if someone asks. Different to, like from a governance perspective, if someone rings you up and says, I want a copy of your minutes of your general meetings or something, then you can actually say, no, only members are entitled to those. Or if someone rings you up and says, I want a copy of your minutes of your board meeting, you can say, well, no, that's a private board document. And even members aren't entitled to see the minutes of the board meetings. But this is a situation where any interested person from the public can actually ring up and ask for a copy. So it's quite a broad requirement. So thinking about expenses, can you incur expenses in carrying on a fundraising appeal? Does it need to be expenses on a shoestring? Can it be, you know, the Ferrari version of a fundraising appeal? Can you do something that's flash and bigger and better and blah, 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 blah? And the answer is yes, you probably can, but there is a reasonableness requirement to your expenses. So condition 7 of the conditions requires that if it's an appeal for donations only, then you need to take all reasonable steps to ensure that the expenses do not exceed 50% of the donation that you'll receive. If it's a fundraising appeal that has associated goods and services, and I think in that respect you'd include like the Daffodil Day style, we give you squeezy balls and teddy bears and flowers and all those sorts of things, because obviously all of those cost money to create. You have to take all reasonable steps to ensure that a reasonable proportion, like that expenses only are a reasonable proportion of the gross income. And what does that mean? Good question. How can you show that you've taken all reasonable steps? Good question. How do you know how much you're going to receive from a fundraising appeal? You don't. So you might have a fundraising appeal that you say, well, our target is to receive $500,000. So we can budget that we could spend, up to $250,000 on expenses because we estimate that we'll receive $500,000, and then something goes wrong and you only receive $300,000. Have you taken all reasonable steps to ensure that your expenses don't exceed 50% of the gross income? So yes, you probably can because you've got documentation to show how you came to that conclusion, but my suggestion would be that it's wise to be conservative on your expenses as well. Now obviously there are reasons that fundraising appeals may seek to do this model. You have your flashy fundraising dinners that are flashy and fun, and part of the ideal is that you're attracting a level of donor who wants to pay $250 a head for dinner or more, and so you need to be a bit flashy about how you do them. But all of these things need to be clearly thought through, I guess. A lot of the negativity around charitable fundraising can be where you have talk of people employing professional fundraisers who take commissions of up to 80% of the donations received, kind of thing. That's what we're desperately trying to avoid, obviously. That's kind of not okay. But it does also raise the issue that you need to be thinking through this in your process. I think if you plan and budget within reason for a certain income to be received from a fundraising appeal, then you can show that you've taken reasonable steps, even if your fundraising appeal then is a bit of a failure. But I would say err on the side of conservative anyway. I wouldn't be budgeting for 50% of expenses. I'd be budgeting for a much lower percentage. When legal things like the Act or the conditions talk about reasonable steps or like reasonable care, the test is usually, you know, what would the man on the street do? You know, the joke in law school is the man on the Bondi tram. What would the man on the Bondi tram think about what you did? Obviously that's an example from a very long time ago, but that's tort law for you. But that's often the question. So what would the average person on the street think about the decision that you've made? And that's the question that you need to have in the back of your mind when you're thinking about whether you've taken reasonable steps. So if you were, you know, sitting down at a dinner party and having a conversation, would the people around the table agree with you that what you spent was a reasonable amount? And if there's uncertainty there, then I would say we probably need to go more conservative. I know that's a really fuzzy test again, but that's sort of the question that you need to ask. Is it likely that people would think that that's reasonable? Or could it be open to disagreement? So that's expenses. Conflicts of interest. So we've talked about that the charitable fundraising regime is quite a prescriptive regime. Now, when we have the situation like RSL LifeCare, we have a company that is a legal person for the purposes of the law, that is a registered charity, that is also an authorised fundraiser for the purposes of the New South Wales charitable fundraising requirements. So what that means is that the legal fiduciary obligations in equity apply in relation to conflicts of interest. The ACNC governance standards apply in relation to conflicts of interest, and the prescriptive requirements of the charitable fundraising regime apply in relation to conflicts of interest. So you have 3 levels of regulation that kind of largely all say the same thing, but possibly not exactly the same way of making it a reality, if that makes sense. So the directors of a corporation have a fiduciary obligation. So that's an obligation of trust in relation to how they relate to the company of which they're a director. So a director needs to avoid conflicts of interest. They need to act in the best interests of the company and for a proper purpose. So they can't put their interests ahead of the interests of the company in relating to dealings with the company. In their role as a director, they need to be acting in the best interests of the company. The ACNC governance standards say a similar thing, that the responsible persons need to avoid a situation where they could attain a material benefit at the expense of the company. They need to act in the best interests of the charity, and they need to disclose conflicts of interest. So that's the ACNC governance standards. So the way the ACNC puts it is they say one of the fundamental responsibility of board members is to always act in the best interest of the charity and in a way that furthers its charitable purpose. There may be times when a personal interest comes into conflict with this responsibility, but through good governance, these conflicts can be identified and resolved or even prevented. The charity sector in Australia has built a reputation for integrity, ethical behaviour and trust. Indeed, charities are among the most trusted organisations in our community. This reputation inspires the confidence of donors and volunteers and is essential to the work of the charity sector. So having a robust process in place to respond to conflicts of interest helps to ensure that this good reputation can be sustained. So that's the ACNC's view on why conflicts of interest is so important, that it goes to the very heart of charities, who they are, and to the reputation of the charity sector. And the charity sector is one that if it loses its reputation, that's very hard to get back. And the ACNC has prepared a guide to help responsible persons of a charity identify and manage conflicts of interest to help ensure that this reputation can be maintained. So that's the first two requirements, the fiduciary obligations and the governance standards. Excuse me. And then you also have additional prescriptive requirements in condition 20 within the fundraising regime. So an organisation that has an authority to fundraise in New South Wales has specific requirements set out in that condition. They're mostly around remuneration or the contracting, a company contracting with the director to provide goods or services. And there are specific situations, there's a specific prescriptive behaviours that are required. So a director, a situation where a director may be remunerated for providing goods or services to the company, that director needs to be absent from the room in any discussion or vote in relation to that matter. And the additional requirement is that the decision of the board then needs to be ratified by the company in general meeting. So that's kind of an unusual extra requirement in this situation, that a decision to contract with the director at board level actually needs to be ratified by a general meeting of the members. Usually in a company, you need to disclose that to the general meeting, but this regime actually requires the general meeting to ratify that decision. So that is an extra requirement. It's not 100% clear whether that ratification can be retrospective or not, but it does need to be ratified in general meeting. Now, it's also important to note that when directors owe these fiduciary obligations to the company when on the board in their role as a director. But when the company, if the director is also a member of the company, when the company meets in a general meeting, the director is there as a member, not as a director. And so the fiduciary obligation doesn't apply. So a member of a company can actually vote in their best interest. They don't need to vote in the best interest of the organisation. They can actually vote in their best interests. But obviously we've got an issue of conflicts of interest here and perception and reputation. So question whether it would be wise for a director to still abstain from voting as a member, even in that situation, just from a perception point of view. But that's conflicts of interest. Definitely something that that directors need to be aware of. Most directors' meetings will require specific covering of conflicts of interest in each meeting, and it's something that directors always need to have on their mind. This slide just looks at where some of the New South Wales and ACT requirements differ. So as a result of the ACT's red tape reduction legislation, some of the requirements have ceased at ACT level, but some of them have continued. So some elements of the charitable collections regime in the ACT do still apply. So you no longer need to report to Access Canberra, and there are a lot of the requirements of the Charitable Collections Act that you don't need to adhere to anymore, but some of the practical requirements like ID badges and things like that do still need to be adhered to in carrying out any collections in the ACT. And there are still penalties under the ACT legislation in some situations. Generally speaking, Access Canberra has basically said, if you're a registered charity, you're the ACNC's problem. We're not worried anymore. But there are still some specific requirements that entities do need to be aware of. So that's kind of the reporting. Do we have any questions at that point, or are we... Oh, good. So if we just have a quick look at compliance, I'm just showing you this slide again just to remind you of the duplication, I guess. And this is kind of a flow chart to highlight some of that duplication. So a registered charity that's fundraising in the ACT is only required to report to and be regulated by the ACNC now, whereas a registered charity fundraising in New South Wales is required to report to and be regulated by both the ACNC and New South Wales Fair Trading. Theoretically, part of the point of setting up the ACNC was actually to try and reduce regulation and reporting for charities and kind of bring it all into one place. Part of the challenge is the states have been reasonably slow to come on board with that. And so at this stage, we've actually got multiple levels of reporting. One of the other purposes of the ACNC was to try and enable you to create one set of reporting that you could then give off to all the different bodies. I think that works now at a federal level, but once again the states have been a bit slower to come on board. So here you've got duplication of reporting and regulation and possibly differences in what you actually need to report and the form that needs to be reported in. So the ACNC, the reporting that you're required to do to the ACNC is various things, including the lodgement of an annual information statement, annual audited financial accounts, notification of any changes in the charity, like change of name or change of purposes, change of constitution, change of responsible persons. In addition, you're required to report to the ACNC within 28 days if you're not meeting your charity obligations in a significant way, there's a material error in any of those documents that you've reported, or if you discover that you've made a false or misleading statement to the ACNC in any of that information or in any of the information you provided. So that's kind of the ongoing compliance reporting requirement with the ACNC. In relation to New South Wales, so Regulation 16 requires an authorised fundraiser to notify the New South Wales Fair Trading within 28 days in relation to any change of its constitution or the not-for-profit nature of the organisation or the winding up clause within your constitution, any change in your incorporation status, any change in the auditor, including change of name or address of the auditor, so that needs to be notified to Fair Trading within 28 days. RSL LifeCare also has Special Condition 5, which requires you to notify within 5 working days if you become aware of any instance of material non-compliance with the Act, regs, or the conditions. So 5 working days is a pretty tight requirement here. So it does mean that you need to be kind of onto things and aware of things and keeping compliance as a forefront. You also, in your Special Condition 5, need to notify Fair Trading of any resignation, removal or replacement of any director. Now, it doesn't say that needs to happen within 5 working days, so I'm assuming that means within 28 days, but that's a little bit slightly uncertain, I guess. So you do need to notify in relation to a change of director, which is a requirement that is a bit stronger. Noting, however, that you also need to notify the ACNC in relation to a change of any responsible person, so that's just on your radar that you need to do both. I'm not entirely sure why everyone doesn't have to tell Fair Trading about the change of director, but that's just not in the requirements. And in relation to Access Canberra, as a consequence of the red tape reduction, you don't need to notify Access Canberra about anything, which is quite good. So RSL LifeCare's additional special conditions. So initially there's conditions for resuming fundraising, so that's largely in conditions 1 to 4. And the ongoing conditions are really set out in condition 5. So we've talked about those, so material non-compliance within 5 working days, change of directors, so I think that's within 28 days. And the other ongoing requirement is that you have this clear expense policy that sets out a clear process for reimbursement of expenses to directors and employees, including use of credit cards or expense cards, record keeping, review of expense claims, financial delegations matrix that identifies limits. So that's a document that you need to have and be aware of and be working under and be compliant with in order to maintain your authority to fundraise. So liabilities for non-compliance, I guess the question is, like, who is liable? We've touched on this a little bit along the way, but there are various offences in the legislation that apply to various different people. So it could be the person or the organisation who conducts the appeal. It could be a person who participates in the appeal. So if you participate in an appeal that you know is being unlawfully conducted, then you are guilty of an offence. So you can't say, I'm merely a participant, it doesn't matter. If you are aware that that appeal is unlawful, then you're guilty of an offence. Others involved in the appeal, so if you publish something in relation to an appeal that you know is being unlawfully conducted, then you're guilty of an offence. And in some situations, directors or managers of the organisation conducting the appeal may be liable. So in some situations, it does actually look through the company itself to the directors and managers of the company. So there's a section 51.1 that says if a corporation contravenes any provision of this Act or regs, each person who is a director or manager of the corporation is taken to have contravened the same position if the person knowingly authorised or permitted the contravention. So if you're a director or a manager and you're aware that there's a problem and you don't do anything about it, you can be held personally liable for that. So it's not enough to kind of sit back and say, not my problem, or I don't have the power to do anything about it. You do actually need to be making noise and possibly notifying fair trading if the powers that be don't make a change in relation to that, or you can be held personally liable. So there are also situations where the minister may revoke an authority to fundraise. So they're set out in section 31 of the Act. It includes things like a failure to conduct a fundraising appeal in good faith and for proper purposes, failure to ensure that the persons conducting the appeal are fit and proper persons. So if you knowingly allow a bunch of thieves to participate in your fundraising appeal, that's probably not a good move. If a fundraising appeal has been incorrectly administered, if the Act, regs or conditions haven't been complied with, if you simply haven't been conducting fundraising appeals in the last 24 months, the minister can revoke your authority. Or the minister may determine that in the public interest, your authority should be revoked. So that would normally happen if your charitable purposes are not for the public benefit or something like that, but or if you're using them for things that aren't for the public benefit. And in those cases, the minister can revoke your authority to fundraise, but can also apply to the Supreme Court for an order on how that money that you've raised through fundraising appeals is to be disposed of. So whether that's given to another charity with similar purposes to be used for those charitable purposes. The ACNC can also impose sanctions. They can revoke your charity registration. They can replace responsible persons, so your board of directors, in the event of non-compliance. So for non-compliance, there's kind of those three levels of potential penalties. So there's monetary penalties to individuals, the organisation, potential jail time. There's revocation of authority to fundraise, and there's the ACNC penalties for non-compliance as well. If we turn now to RSL LifeCare's internal compliance tools, so I guess one of the keys coming out of this report, and one of the key purposes going forward is to actually get the in-house stuff in order. Once again, the key message, talk to Kerry. But these are the policies that are either approved or in process of being approved to help you in your internal compliance. So these sit under, these documents sit under the policy. So the key document is the policy that sets out how RSL LifeCare will engage in charitable fundraising. And the other documents sit under the policy to flesh out the policy and help you understand how to apply the policy. We've kind of tried to say it here, and it's probably a bit small for you to see, but you will get a slide pack. This is just a bit of a flow chart that is, it doesn't cover every situation that could arise, but it tries to set out like what sort of decisions need to be made along the way. You know, and it questions whether it's for RSL LifeCare's charitable purposes. And then, like, the key thing is, like, seek written authorisation. Any charitable fundraising needs written authorisation. So whether that's authorisation from manager fundraising and events, or whether that's CEO or executive general manager communications and strategy. Fundraising does need written authorisation under RSL LifeCare's policy. So once again, if any fundraising situation comes up, best to go to Kerry.
Claire, before you just move on from that, I don't know how many people have seen the policy that was approved in February, or if it's up on your website yet. But I just wanted to highlight in relation to that, the internal policy has an implementation section, and that flowchart is just a diagrammatical representation of the steps you have to follow if there's a fundraising activity happening at one of the premises for which you're responsible. So all that does is it just restates it diagrammatically. So if you look at the policy, I think the section's called implementation, there's about 9 steps, and you look at it against that chart, you'll see that it's just a diagram or a tree of the steps that you need to step through. But it's a useful way to think about it, and I would actually commend that slide to all of you when you get your slide pack later. Just take a little bit of time familiarising yourself with it, because it directly reflects the policy that's recently been adopted.
There we go. We mentioned here compliance through good governance practices, and this is really just to consider, like, we've spoken a lot today about the charitable fundraising regime and about the ACNC's regime, but one of the other things that's relevant to think about is that there are some situations where fundraising law can be impacted by broader regimes within the law, like the Australian consumer laws. So specifically in the situation where there's supply of goods and services in relation to your fundraising appeal, the Australian consumer laws apply to that situation as well. And recently there was a prosecution in relation to the Bell Gibson case, which most people would be aware of, in relation to false claims made about charitable giving. So it's not like, so we've talked through the specifics of the charitable fundraising regime, but there is a broader kind of body of law that sits behind it. So all the trade practices sort of stuff around the Australian consumer laws can also apply to a charitable fundraising situation. Once again, the policy has been established with a view of covering off the full picture of what you need to understand in relation to charitable fundraising, including these consumer law type considerations, and to help you not just with basic compliance but also from a best practice point of view, so that RSL LifeCare is not just doing the bare bones minimum to meet the requirements but is actually exceeding that. So I do commend the policy to you, and it is something that I think you should read and be aware of and be across. Yeah, as we've noted, the requirement is not that you're all experts. The requirement is just that you know who to go and talk to when there's a problem, or when anything comes up. So not just problems, but when anything comes up in relation to charitable fundraising. So I hope that, once again, the key message is, if in doubt, go talk to Kerry. So thank you. I do just want to have a quick chat about looking to the future. So one of the things that came out of, was mentioned in the Bergen report, is that it's recommended that consideration be given to the introduction of a single unified Australian statutory regime for the regulation of charitable fundraising. This is not the first time that that idea has been mooted. It's fair to say that there's been plenty of consideration given to that topic. And certainly in the last decade that I've been working in this space, it's constantly come up. There's been constant talk about harmonisation of charitable fundraising regimes at a state level, and there's been constant talk, specifically since the establishment of the ACNC, at referral of powers to federal level. And I think, in fact, it's probably been sitting in COAG for at least 10 years as well as an agenda, but there's no specific catalyst or driver to actually make it happen. So before 2012, before the ACNC was established, the challenges were more immense because there was no obvious regulator to take the reins. Now we have the obvious regulator in the ACNC, although over the few years that it's been established, its life has been a bit up and down with governments saying they'll get rid of it, but it seems to be here for good now. And some of the states have implemented policies to actually hand over that regulation to the ACNC. So South Australia, ACT have done that. Northern Territory never regulated it anyway, so that sits with the ACNC too. But it really is still our hope that ultimately the states will all get on board with recognising that the regulation that the ACNC does in relation to charities is sufficient for the purposes of charitable fundraising as well. That the combination of charity regulation and things like the Australian consumer laws together is sufficient to mean that this additional duplication of a charitable fundraising regime is unnecessary. Sadly, however, at this stage, this is still the regime we're working on. So I hope that in our time this morning, we've managed to unmuddy it a little bit. Apologies if we've actually muddied it a little bit more by making it more confusing. But I'm hoping we have actually helped you understand a little bit how the charitable fundraising regime works in New South Wales and the ACT, and practically how RSL LifeCare can actually move forward